A dividend trap is when a company, stock, or ETF offers a very high dividend yield in order to attract investors, but the dividend may not be very sustainable. This is because the company's earnings or cash flow or the ETF cannot support the unusually high dividend. And unfortunately, typically, novice investors are the ones who fall victim to this because they may be tempted to buy into the stock or ETF based solely on the high dividend yield, without actually considering the stocks or ETF's financial health. In this video, we are going to go over why JEPI ETF might seem like a dividend trap, but in my opinion isn't, and why I personally bought over $75,000 worth of the high-yielding ETF. So first, a little bit more about JEPI. JEPI ETF, or JP Morgan's Equity Premium Income ETF, is an exchange-traded fund that seeks to provide income and capital appreciation by investing in a diversified portfolio of equity securities, primarily U.S. large-cap stocks, as well as selling covered call options on those holdings. So in simple terms, the JEPI ETF invests in a basket of stocks that are selected based on certain criteria, such as market capitalization, liquidity, and financial performance. The fund manager then sells call options on a portion of these stocks, which generates quite a lot of income for the fund in the form of premiums paid by the buyers of these options. JP Morgan's JEPI ETF is what we would consider a covered call ETF. And call options are contracts that give a buyer the right, but not the obligation, to buy the underlying stock at a predetermined price, which is the strike price, on or before a certain date, which is known as the expiration date. When the fund manager sells call options, they receive premiums paid by the buyer of these options, which can help generate additional income for the fund, and which can help pay out more and more dividends to the JEPI investors. So the strategy that the JEPI ETF uses, the covered call strategy, generates a significant portion of income on a monthly basis, which is why JEPI's dividend yield is so high. Digging a little bit deeper into the JP Morgan Equity Premium Income ETF's performance, year to date the ETF is basically flat, down 0.37% as far as ETF price return. That's as of film in this video. And over the last 52 weeks, JEPI has traded between around $51 and some change, all the way up to almost $57. Now for me personally, one of the main reasons I own well over 1,000 shares of JEPI is of course to capture that nice juicy dividend, which we're going to go through here in a second. It's not really to get rich off of the price return. Now that being said, even though JEPI does offer a nice high dividend yield, it would also be nice to see some price return over time, but considering over the last year time frame, JEPI's down 1.61%, and zooming out even further, JEPI on the max time frame since around 2020, this ETF is only up around 6%. Now once again, for me personally, for what I'm looking to get out of this ETF, I honestly don't really care if JEPI trades sideways, as long as this ETF is going to yield anywhere from around 7 to 9% per year or hopefully more. I'm honestly not complaining all that much. But at the same time, when you look at something like the JP Morgan Nasdaq Equity Premium Income ETF, JEPQ, sort of JEPI's brother or sister, year to date this ETF is up over 20% price return, and that's not even including dividends. So over time, I have been stacking more shares of JEPQ moving forward, and I've honestly been holding off on any more shares of JEPI. But to get back to JEPI, to look a little bit deeper into the current dividend yield and dividend growth, or lack thereof, of course, JEPI's trailing 12-month dividend yield is somewhere around 9% as of filming this video. And although 9% trailing 12-month dividend yield is honestly pretty great when you really compare it to any stock or ETF across the market, when I first started buying into shares of JEPI over a year ago, the ETF had a much higher dividend yield, and that's because when I started buying the majority of shares of JEPI, it was at the end of 2021 and then through 2022, where the JEPI ETF was paying anywhere from around 50 to even 60 cents per month on an ongoing basis. And since pretty much the start of this last year, JEPI's been paying less and less until the most recent few months, where now we're seeing the dividends go up a little bit higher. Now I just say that to make a point that even though JEPI has been trading basically sideways, and even though the dividends have been decent, I do personally think that throughout the entire market these days, there might be better options to buy into, which is once again why I have not been buying any more JEPI as of recently. But that being said, JEPI could still have some upside from here. It's just not something I'm looking to add more of as of right now, especially because I'm sitting on so many shares. Now, the last thing I thought would be fun to do is to compare the JEPI ETF's total return since the ETF's inception and compare it to something of that of the S&P 500. So right here, if we were to have invested $10,000, for example, and reinvested the dividends since the start of the investment back in May, if you look at JEPI and compare it to SPY, you can see that the average total return since the inception has actually been pretty consistent. You can see that JEPI's average annual total return is honestly pretty high at almost 12%, which I'm not complaining about whatsoever. And a $10,000 investment in JEPI back in around May of 2020 would now be worth almost $14,847. And that's just after 3.5 years more or less. Now the S&P 500 is obviously very, very hard to beat, and that's why it's really important to always compare most investments to the S&P 500, because most of them are going to have a hard time beating the S&P 500 on multiple time frames. But that being said, the S&P 500's $10,000 invested would have turned to $16,126, which is a 14.66% annual return. Now, all in all, even though the S&P 500 did beat JEPI in this given time frame, I will still say, like I've said earlier, I do think that there's definitely a spot for JEPI in many more income-focused investors like myself's portfolios. And even though JEPI does offer a pretty high starting dividend yield, I personally do not think that JEPI is anything near a dividend trap. Now, the last thing I wanted to do is show you some of the dividends that JEPI has paid me in just one of my dividend growth portfolios. I do have multiple portfolios across multiple brokerages for insurance reasons. But just for example, so far in 2023, this one portfolio that I hold some shares of JEPI in has paid me $315 as of January. In February, $283. Back in March, $268. In April, $297. In May, $283. Then we had some lower payouts back in June, $245, $241 in July. Back in August, $194, which was a very, very low one. Then back in September, $226. Then as of recently in October, $243. So as you can see, holding the same amount of shares, really depending on how much that dividend is declared for on an ongoing basis, is really going to change the amount of income like an investor like myself is going to get paid. And luckily for me, as of right now, I don't rely on these dividends for, say, to cover a bill or anything. I'm using these dividends for right now to reinvest into more shares of JEPI or other ETFs, honestly. I've been buying a lot more of things like SCHD as of right now. But I say that just to bring up the point that if an investor, for whatever reason, was to say retire and use the JP Morgan JEPI ETF as money they're going to use to cover a bill, it's going to sort of be dangerous because you never really know exactly what you're going to get on an ongoing basis. Now, of course, like any investment, the JEPI ETF is not going to be suitable for every single investor. The investment vehicle that JEPI provides is for those that want to have income on a consistent monthly basis paid to them, and also those that are willing to maybe take a little bit less long-term growth potential in order to receive income a lot sooner. So for me personally, the reason I bought around $75,000 worth of JEPI over the past few years is because a large portion of my portfolio does have growth aspects to it. What I mean by that is I invest in things that are going to appreciate much more in price in the long term and not pay me as much in the short term. So the fact that JEPI makes up maybe 3 to 10% of my overall portfolio as of right now, I like the consistent income. I like getting paid every single month from the various JEPI shares that I own. I use that income to buy other names like SCHD or other single stocks that I want to hold on to long term. So although the JEPI ETF is by no means the best investment out there in my opinion, I do think that it has a place in many different dividend investors' portfolios. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.